For months now, the U.S. economy has had this one really solid pillar holding it up, a super strong job market. But the latest report just dropped and, wow, it is a real shocker. It missed the mark so badly that it's got everyone asking one huge question.
Yeah, is the U.S. job market finally cracking? I mean, for so long, it's been the bedrock, the one thing we could all count on. Are we starting to see some real fissures?
All right, so here's how we're going to break this all down. First, we'll dive into the numbers that just blew everyone away. Then, we'll figure out why hiring is suddenly hitting the brakes. We'll also get into Wall Street's kind of weird reaction. That whole bad news is good news thing. And most importantly, we'll talk about what this means for you and what to look out for next.
Okay, let's kick things off with the report itself. The numbers that really caught everyone by surprise. I mean, we've had this long run of steady, almost predictable growth, and then, boom, this happened.
So, to really grasp just how big of a deal this is, you got to understand what everyone was thinking was going to happen. All the experts, all the economists, they were basically singing the same tune. Another solid month of job growth. Business as usual, right?
Wrong. That is not what happened. In fact, the data was so far off that some folks are even saying the economy might have actually lost around 30,000 jobs. I mean, think about that. That's not just missing the target, it's like the arrow turned around and flew in the opposite direction.
And that wasn't the only red flag. At the very same time, the unemployment rate actually ticked up. So what does that tell us? It means more people are out there looking for jobs, but they're having a tougher time finding one compared to just a little while ago.
And look, this is why everyone pays so much attention to these numbers. The job market is kind of like the economy's heartbeat. When companies are hiring left and right, it shows they're feeling good about the future. But when they pump the brakes, it's a huge signal that they're getting a little bit nervous. So naturally, the big question is, why? What's putting the squeeze on hiring all of a sudden? Let's dig into the main reasons behind this downturn. Okay, so businesses are basically getting hit with a triple whammy right now. First up, you've got high interest rates. That just makes it way more expensive to borrow money to, grow the business and expand. Then, pile on rising energy prices. That eats directly into their budgets, leaving less cash for new hires. And finally, you've got these big slowdowns in major industries. Think tech, manufacturing, retail. The layoffs there are now big enough to pull down the national average. It's a perfect storm, really.
All right, so you hear bad jobs report, and you probably think Wall Street would be freaking out, right? Well, it's a lot more complicated than that. Let's get into the weird logic of why bad news for the economy can sometimes be seen as good news for the stock market.
Now, at first, the market did exactly what you'd expect. Stocks went down, the Dow, the S&P 500, they all took a hit. The thinking there is pretty simple. A weaker job market could mean the whole economy is slowing down, and that's not great for company profits.
But here's where it gets interesting. There's this massive tug of war going on in investors' minds. On one side, you have the fear that this is the first sign of a real recession. But on the other side, there's hope. And that hope is that a cooling job market is exactly what the Federal Reserve needs to see to finally start cutting interest rates. And cheaper borrowing costs? That could send the stock market soaring.
Okay, so we've covered the big picture with economists and Wall Street. But let's bring it back down to earth. What does all this actually mean for you? For your job? For your wallet?
Well, the most obvious effect is on anyone looking for a job. When hiring slows down, there are just fewer open positions out there. That could make the job search a bit tougher. And with less competition for workers, it might also be a little harder to negotiate for that big salary bump you were hoping for.
But, and this is a big but, there is a potential upside here. A huge reason for slowing down the economy is to get inflation under control. So if this trend holds, it could mean you start seeing lower prices for things. At the store, for services, and this is the big one, for loans like mortgages and car payments. It's a real trade-off.
Look, this jobs report is really just one piece of the puzzle, a single snapshot. So to get the full picture of where things are actually headed, there are a few key things we all need to be watching.
All right, keep your eyes on these three things. First, the upcoming inflation reports. Those will tell us if prices are really starting to cool off. Second, the Federal Reserve's next big meeting. That's where they'll signal their plans for interest rates. And of course, the next couple of jobs reports. They'll show us if this month was just a fluke or the beginning of a whole new trend.
And all of this brings us to the one big, lingering question. Is this just a temporary pause, a little breather in what's still a strong economy? Maybe a necessary cool down to fight inflation? Or is this a real turning point? An early warning shot that a much bigger economic shift is on the horizon? For now, only time and the data is going to tell.